Welcome back. January has been a tough month for investors. The S&P 500 had its worst month in years.
Yeah, and cryptocurrency also took a huge hit. Joining us live to break it all down, Joe Pompliano. Thanks for joining us, Joe. And start with the stock market, a rough start. And, you know, there's that old line, don't fight the Fed. Is that what this is about? They want to raise interest rates.
Yeah, good morning, guys. Thanks for having me on. And you're exactly correct. What we saw last year and during the pandemic really was that the Fed stepped in and they had to, and they dropped interest rates to zero. They injected trillions of dollars into the economy to stabilize and stimulate growth. And risk assets responded really well. So Bitcoin was up 60% last year. The S&P 500 was up 26%. Real estate was up anywhere from 15 to 25%, depending on kind of what you were looking at. But now that the unemployment rate, we were at 3.5% before the pandemic started. It went all the way up to 15% during the pandemic. And now we're back down under 4 at, I think, 3.9%. So the Fed is stepping back in. They're saying, hey, we have unemployment under control. Now we need to curtail inflation. We're going to start to hike interest rates again and start to raise them. And what's happening is people are getting scared. They're saying, hey, we need to sell off risk assets and move into asset classes that are a little more defensive. So that's really what I think we're seeing. It's just people anticipating these rate hikes. And the Fed has been very clear that they're going to do it regardless of kind of how the stock market reacts. But it just depends on kind of how many we get now, I believe, right? Some banks, I think JP Morgan is saying that there might be 7. I think market consensus is maybe 4, 5, or 6, somewhere in there. But at least everyone is now believing there will be interest rate hikes. And what we're seeing is people are moving off of risk assets and into things that might be more defensive when that happens.
Right. So, Joe, how will this impact the housing prices, stocks, everything like that, inflation?
Yeah, I think the general way to think about it is they have 2 jobs, right? It's maximum unemployment and price stability. And maximum employment is somewhat under control now, whether you want to say we were at 3.5% before and it's 3.9, it's close enough. And now they have to curtail inflation, and inflation is at a 40-year high. The last print was at 7%. Gas is up 50% year over year. Real estate, again, is up 15 to 25%, depending on how you look at it. And inflation is just really bad. So now they're going to raise interest rates. And generally, higher interest rates just have a negative impact on the stock market and risk assets in general, right? Borrowing is more expensive. It slows down growth for some of the companies in the public equities market. And generally, we just see these companies, it impacts their overall growth and their stock market value. So whether it's the stock market or real estate or kind of other risk assets outside of fixed income, I think that it might be a more challenging 2022, certainly than it was in 2021.
Yeah, and Joe, let's talk about Bitcoin for a moment. Every analyst, or a lot of analysts, predicting $100,000 by the end of the year for each Bitcoin. Now it's crashing just like those meme stocks. Are they connected?
Yeah, I think it's interesting. And I was certainly one of those people that thought that we would get to $100,000 Bitcoin. And the reason was because of just historical based off halving cycles and how the macroeconomy was going with inflation. We've heard for a long time, hey, no one saw inflation coming. Bitcoiners knew it was coming for a long period of time. You can't inject that much money into the economy and not have an impact from an inflationary standpoint. So I think that we were right in that angle, but there was just some outside factors that we didn't foresee coming. So one of those, for example, was China banning mining. So China said overnight, hey, there's no more Bitcoin mining. And at the time, they controlled 2/3 of the market of the mining market. Overnight, all of those people had to move out. And the US was a huge beneficiary of that. Now we control the most mining in the world, but it distributed it more now. And the hash rate has picked up. So 50% of the security of the network is generally how you should think about it, dropped off overnight. It has now picked up over the last few months. And what we saw was another rally in Bitcoin. So Bitcoin went and reached another all-time high at 69,000. But now what I think we're seeing again is it's trading like a risk asset. It's trading kind of in correlation with the stock market because of how the Fed is acting. And we've seen that draw down over the past month or two, and it's lost about 50% of its value. Now, crypto in general has been more impacted. There are other cryptocurrencies that have fallen more. So I think Bitcoin has done its job within that kind of asset class of being a little more stable. But ultimately, yeah, it's lost a ton of value. It didn't hit that $100,000 target. But we'll see what happens over the next year. I think with high inflation and kind of instability in this decentralized network, that it's still going to perform well over the next few years. It just didn't do what we expected it to maybe in 2021.
All right, Joe, last question for you, and we got to do this fast. But speaking of Bitcoin, we know the Rams wide receiver Odell Beckham Jr. made headlines when he announced that his salary would be paid in Bitcoin. An ESPN report says that about $750,000 deal would only net him about $50,000 after taxes due to Bitcoin's price drop. But you say this is misleading. Why?
Yeah, I think it's a little misleading because certainly you could look at the math calculation and maybe that's a little off. But ultimately, whether it's $50,000 or $100,000 or $150,000, I think the general point still stands, which is that Odell Beckham Jr. has made already in his career over $100 million from salary and endorsements. So this represents less than 1% of his total earnings, right? So I don't think any financial analyst in the world would say it's absurd to have 1% of your assets within Bitcoin. I think that's fair. And then the other part that people often leave out is that this was a marketing partnership that he did with Cash App. So Cash App has a product. They want to market it to other people. They paid him a 7-figure fee for that, which was more than the entire contract in general. And then I think thirdly, like this is a long-term play. Odell Beckham Jr. does not have to touch this money. He has plenty of money in the bank. He does not have to worry about the day-to-day fluctuations of Bitcoin. It's a long-term investment for him. I would be surprised if he isn't thinking in the 5, 10, 15, 20-year range to hold this asset and see how it appreciates.
Talk about a lot to think about if you're an investor. All right, Joe, thanks for that.
Of course. Thanks for having me.
We'll be right back.